We've all used the services of Urban Company, whether it is to repair your washing machine, a deep clean before Diwali, a quick salon treatment at home. But now is the bigger question, is it time to own a piece of Urban Company? Founded in 2014, Urban Company is India's largest tech-enabled platform for home services, and it's hitting the capital markets. 1,900 crore of an IPO size, valuation hitting nearly 15,000 crore rupees. Joining me on this special episode of IPO KYC is the founder, CEO, CMD, Abhiraj Singhbhal. Thank you very much for joining in, and I am Reema Tendulkar. Abhiraj, it's a great story, right? 2014, you've scaled rapidly, your revenues are annualizing 1,500 crores, you've got international expansion, you're growing at 30%, now getting into hardware. But the question is, you turned profitable in 2025. Is this company going to be profitable on a sustainable basis?
Reema, thank you so much for inviting me. It's an absolute pleasure. Taking your first question on profitability, if I talk about the last 3 years, we have scaled our net revenue from 437 crores in FY22 to about 1,144.5 crores in FY25. And in this period, for the 707 odd crores of incremental revenue that we've added to the top line, about 385 crores has gone to our adjusted EBITDA, which shows the strong contribution margin and gross margin profile in the business. We track at a contribution margin of about 56% of net revenue, or roughly 19.5% of net transaction value. We've also kept our fixed costs fairly steady in the last few years. Profitability is an important goal for any company, and for us as well. As we continue to scale, we would want to continue to focus on operating leverage, cost excellence, and continue to scale with profitability.
But talk to us about operating leverage, because your adjusted EBITDA last year, FY25, it was about 11-12 crore rupees. In Q1 of FY26, it stands at 21 crore, which means in the current quarter, it's almost double of last year. So what explains, is this the power of operating leverage? When your top line doubles, what could your EBITDA look like?
So, Reema, again, in internet businesses, typically, one has to forward invest in a few areas. This would be, in our case, for example, training centers to train our service professionals, our technology team that builds the apps, the website, as well as the entire back-end layer for our service professionals, the entire workflows, marketing and brand building to acquire consumers, and so on and so forth. These costs typically don't scale with top line. In fact, they can scale much slower than top line. And therefore, once you hit threshold scale...
What is threshold scale?
Well, in our case, threshold scale was hit, I would say, in FY25. It was the first full year of profitability for us at all levels, adjusted EBITDA, PBT. Prior to that, we were loss-making. So I think FY25 was, in that sense, a reasonably pivotal year for us. We crossed 1,000 crores in net revenue. We crossed 3,000 crores in net transaction value. We broke even on a sustainable basis for the full company for the first time. India business had been profitable earlier as well, but now at a consolidated level. So I would consider it to be an important milestone for us. And now I think going forward, we would want to continue to focus on growth while also improving our margins.
So profits are sustainable?
I would imagine so. I think we will have to continue to be strategic about growth. We're still a very small company in the scheme of things. We think we're just getting started. We would like to be 10, 20, 30 times bigger in the coming decades. And for us to be able to do that, we will have to continue to make investments in growth.
So suppose your top line doubles from here on, right? It's about 1,100, 1,200 crore rupees in terms of net operating revenue. It doubles. Adjusted margins in Q1 were 5-6%. What could that number look like?
It would be hard to sort of put a
Double
specific...
digit?
Let me put it slightly differently. I think the areas where we would want to invest would continue to be technology, would continue to be training and service professional excellence and quality, and brand building. I think we would like to make these investments, albeit at a slower pace than revenue growth. So any growth in revenue that we see, especially in our core business in India, which is already fairly profitable. It was operating at a close to 10% adjusted EBITDA in FY25. I think any investments we make there, we would want to be very mindful that those investments are not growing faster than top line, so that we can continue to see sustained margin expansions every year. I would avoid giving any forward guidance, but we're committed to improving the quality of the business with every passing year. One of the things that is our internal principle is that every cost line item every year should see operating leverage. And that's a philosophy with which we operate internally.
Okay. Just for the benefit of our viewers, you have three sources of income. One is India consumer. That's your core market, profit center, 10% EBITDA margin, 75% of your top line. Second is your native brand, where you are manufacturing hardware products like lockers, like security locks, air purifiers. And third is your international business. That's about 10%. Now, native and international is loss-making as of now. We'll come to it. But let's talk about your India consumer.
Sure.
Talk to us about your ambition here, the strategy, the opportunity that you see.
So, Reema, India Consumer Services is our largest business. As you rightly said, it's about 77% of our net revenue in FY25. It's one where we offer a host of services at home, be it beauty services, cleaning, carpentry, plumbing, AC and appliance repair, painting, etc. We still think we are only getting started in this business. The opportunity is humongous. The total addressable market for home services in India stood at nearly $59 billion last year. And it's expected to grow to about $97 billion by 2030.
So to tap into this $100 billion addressable market by 2030, you've also laid out your expansion plans. I think you're present in 47 cities right now. You're targeting 200 Indian cities by 2030. So as you expand into tier 2, tier 3, what would profitability look like? Will it be dilutive or will it add to your margins?
Well, typically when we look at a tier 2 city, there are a lot of existing investments that we are able to leverage. For example, our technology platform, which is one of our big areas of investment, doesn't need incremental investment when we expand to a new city. We've, from early on, focused on brand building at a national level. So usually when we enter a new city, there's already awareness of the Urban Company brand from users in that city as well as service professionals. In fact, I keep getting emails from cities where we're not present today by users asking us to launch there. We also tend to leverage our training centers in the larger cities across the smaller cities through a hub and spoke model. So it gives us the ability to sweat our training assets further. So the incremental P&L of a new city that we add is usually better compared to an existing city. And contrary to popular wisdom that whenever you enter tier 2 or tier 3 cities, you have to drop prices, we haven't really done that.
Okay.
We've seen pricing power hold up in these cities.
Pricing is the same now, whether you...
It's not exactly the same, but it's in the same zip code, I would say.
In the same zip code, okay. There's one concern that a lot of the top line, not a lot, part of the top line, your revenues are growing at 25% for the India consumer business for the last 2 years. But that is coming on account of expansion into newer categories and expansion into newer cities. Your annual transacting customers is growing at a slower pace, I think 16%, roughly, thereabout. Is it hard for you to get new customers? Is scalability a concern?
I would say that scalability for us has been something that we take great pride in, how rapidly we've scaled in the last few years. And we continue to see great opportunity to scale up in the coming years. Our oldest cities and oldest categories continue to grow at a very healthy clip.
Like what?
Can't get into the specific numbers, but most of our growth comes from our big cities and big categories. You spoke about new user growth vis-a-vis revenue growth. Revenue growth will always lead new user growth, and that's because as our users mature, they try out newer categories. They cross over to other categories, and therefore their annual spends only increase every passing year, which is a good thing. So if you started off in beauty services or in AC repair, over time you will move on to trying other categories, and therefore the spends that you make on the platform annually will keep on growing.
So is a double-digit or a mid-teens kind of annual transacting customer increase growth something that you're confident about sustaining?
We will try.
We will try.
And we will work hard towards it.
Okay. Do you see the risk of disintermediation where a customer and the service provider, I mean the handyman, bypasses the platform? So, very often we use urban company, right, to get the lead. And then he comes and services, and then the next time you say, I'll call you directly, or he will say, call me directly, right? And we will save on that commission, right? I mean, how do you deal with that? I mean, and what have you ever been able to quantify the loss to you on account of that?
Look, I'm sure there's a little bit of that happens.
Yeah.
Our focus as a company has been to add enough value to both the sides that they see the value of going through the platform and continue to focus on that value add. Because, as a philosophy, we don't want to prevent people from doing this. If we focus on prevention, this is India at the end of the day. So people will find newer and newer loopholes to go around the system.
Yeah.
So I can talk a little bit about the value add. I think a significant part of the value add is very, very high earnings for our service professionals.
Like what? I mean, do we have some numbers?
Absolutely. So in FY25, the average service professional in urban company, net of all commissions, fees, taxes, travel costs, and product costs, made over 26,000 rupees a month. And this is with only about 83 monetized hours on the platform on a monthly basis. If we look at the top 20% of service professionals, they made well over 40,000 rupees net. And the top 10% made about 45,000 rupees. So I think service professionals have also realized that if they go through the platform, their income opportunities are higher. They get free life, accidental, and health insurance cover. Safety is something that's very important for them, and it's an area of investment for us. And similarly, I think on the consumer side as well, we have subscription programs today.
Yeah.
We have a UC Plus membership program. We have warranty covers to protect the consumer in the situation of a downside. So for all of these reasons and more, over a period of time, we've seen that disintermediation has only come down meaningfully.
You will often be compared, especially once listed, to Zomato and Swiggy. How comparable or similar will the journey be of urban vis-a-vis them? Because, at the end of the day, the way I see it, they're two separate categories, right? And each category brings its own dynamic. For instance, I can order, from a restaurant once a week. I can probably order groceries every single day. But I would require a deep clean once a year. I would require a handyman to repair my AC perhaps twice a year, right? So there is a difference in the frequency. Plus, yours is a more asset-heavy business where you are spending on training all your service professionals. I mean, how do you see the comparables being drawn as a consumer tech platform in India?
I think we are a unique platform, Reema. Truly category-defining company with no real comparable. But a company that exactly looks like urban company and operates like urban company, there are very few and far between. And part of the reason is ours is a full stack model. It's not, technology is only one part of it. We focus a lot of energy on training. We focus a lot of energy on tooling, helping service professionals with certification, SOP compliance, pricing standardization, and the brand urban company stands behind every single service delivery. So if anything goes wrong, it is our neck to choke.
Yeah. Have you modeled your company after any company?
I think we definitely derive a lot of inspiration from players like Amazon. I think truly extraordinary company which focuses on the consumer. That's a company that we look up to. In India, we look up to DMart. We look up to Zomato. I think these are iconic companies as well. So we draw inspiration from several, great companies.
Got that. So now let's talk about your second source of income, right? That is native. Where you're actually manufacturing water purifiers, for instance. What made you get into this category?
So Reema, we have been in the category of water purifier servicing and filter changes for about 8 to 10 years now. And then about 5-6 years back, we entered into our own private label spare parts, the filters that go in. So there was already a base knowledge and a base consumer, consumer base that was transacting on the platform in this category. These consumers had a deep pain point which they voiced to us, which is that why does our water purifier need servicing and filter changes every few months? Why do I have to go through the hassle? And for a while we felt that this is how the industry is, this is how it operates, what can we do about it? But when this voice from the consumer became too loud, we decided that let us see if we would want to further vertically integrate and have our own device. It took us we took that call in 2021. It took us about 2 years of product development, R&D, to come up with a state-of-the-art water purifier that is needing no filter changes for up to 2 years. After 2 years, you service it once and it's again set for another 2 years. It's also very transparent and smart water purifier. It's integrated into the Urban Company app. You can see the quality of water you're drinking, the life of the various filters, and so on and so forth. So very starkly different from how the industry has operated, which is with opacity in a sort of a razor blade model. It's gotten off to a great start. It did about 116 crores of net revenue in FY25, which was the first full year of operations. In the first quarter, and we've reported that it's done about 60 crores of net revenue. So it's growing at a rapid pace.
But it's loss-making.
It is loss-making right now.
Okay. But what's the scale that you need to flip the margins?
I think we have already seen operating leverage starting to play out materially in this business. Year on year, the losses have come down at a margin level, and we believe that as we continue to scale it, that operating leverage will play out, and it's a matter of time before this business also turns profitable.
In 2 to 3 years?
Again, I will not be able to focus on the specifics. But
fair.
If you look at our past history, newer businesses haven't taken a very long period of time for us to flip.
But hardware is a different beast, right? There is inventory, there is working capital, there are warranties involved. Like, how much capital are you willing to invest, or you plan to invest in native? And what are the new categories you're entering? I think you're present only in 2 right now, smart locks and air purifiers.
Yes. So historically, I think in the last few years, we've invested a little over, I think in the range of 50 to 100 crores in this business. Total. And I think it's gotten off to a great start. That's been over the last 2 to 3 years. So it gives you a sense of what could our investments look like over the next couple of years. I do think that this business will demonstrate operating leverage as it moves forward, and therefore we are hopeful that at least for the 2 lines of businesses that we operate today, which is water purifiers and smart electronic door locks, the meaningful portion of investments is behind us and not ahead of us.
Are there new categories you're exploring, or where work has started, where you've identified pain points?
Not at this point in time. I think, as you rightly said, it's a different business. It has lots of synergies with our existing business, particularly on the service side. The fact that we're inside the home, we have all of these insights, we have a supply chain that exists, which we've leveraged. But at the same time, it has certain unique aspects to it. So we also have to make sure that, we are focused. It's a
calibrated approach.
It's a calibrated approach.
What about your global expansion plans? You're present internationally. I think UAE is already turned EBITDA positive. You've got presence in the Kingdom of Saudi Arabia, in Singapore. Today, it's, I think, 10% of your revenues. What could international revenue contribution look like? And how much of the IPO proceeds are going to go into your global expansion plans?
So you're right, Reema. Internationally, we have wholly owned subsidiaries in UAE and Singapore. And we're in a 50-50 JV in the Kingdom of Saudi Arabia. The JV went live only on the 1st of January 2025. We are quite excited by our operations in UAE and Singapore. UAE, as you rightly said, is already EBITDA positive. Singapore hopefully will get there in the near future. And these businesses also demonstrate strong operating leverage. We have built a good brand in these 2 markets, but at the same time, we're very early. and the opportunity is large. So we want to be focused on these two markets. The Kingdom of Saudi Arabia is even more early. It's a 50-50
So there are no new geographies you're targeting right now?
Outside of these three, no. Because I would say the opportunity here is huge. And given the recency of our expansion into these markets, we would again want to focus on these markets first and make sure they get to scale, they get to profitability, they become a meaningful percentage of our top line. And more philosophically, I would say the opportunity in India today is so huge that we would rather focus our energies on going deeper into tier 2 and tier 3 cities in India versus expanding into newer countries.
You all are also expanded in Australia and USA, and then you all rolled back, you all wound down the operation.
Yes.
All right. Okay, let me get to your newest offering, and I think it'll get everyone very excited, at least all the homemakers and the women. This InstaHelp.
Yeah.
Which is basically like if your Badli Bai doesn't show up on any day, in 15 minutes you can get someone to clean your homes. Pilot operations in Mumbai, I mean, what's been the response so far, the offtake?
Response has been phenomenal. The pilot is now no longer a pilot.
Okay.
It's started
How big is it?
Well, we're now present in multiple cities to start with. So we're present in Bangalore, Hyderabad, Delhi, expanding to other cities. It has grown at a breakneck pace month after month. Consumer demand significantly outstrips supply right now. So the only thing my team is doing is training and onboarding in this category.
Do you know a number of how big the opportunity is, like the market that you're targeting?
Well, in the total addressable market that we looked at, about $10 billion, roughly in that zip code, was the daily home cleaning and housekeeping services. So it's a fairly large opportunity.
Yeah.
And I think that opportunity will only grow because, as you know, Reema, when a market is completely unorganized and completely fragmented, the total addressable market, is typically understated vis-a-vis what it could actually become when that market organizes. Through this platform and other similar platforms, for the first time, house help in India will make a decent middle class wage and become part of sort of the formal middle class India that we all, the promise of India will come alive for them.
If 10 years later, someone has to write the urban company story, what is the one line that you think they should lead with?
I think the first 10 years was about building a platform for home services. I think the next 10 years will hopefully go beyond that to building a true home platform which offers Indian consumers reliable and high quality access to home services and solutions. And in the process, Urban Company becomes an institution for urban India, one that has impacted and empowered hundreds of thousands of service professionals to lead dignified and respectful lives. An institution that is known for its ethics, its corporate governance, and carrying all stakeholders along. I think that's what we aspire to build over the next 10 years. In one line, an institution that India can be proud of.
Thank you, Abhiraj. This has been such a great conversation and wish you all the very best. Thank you.
Thank you so much, Reema. Thanks for having me.